All right, good people. Welcome to another episode of Stock Market Today. This is actually going to be a continuation video from the last video where I expressed my opinion on sectors of the stock market that could possibly be affected for the year 2025. Now, I didn't get a chance to show you how I profit during the declining market, but not only limited to declining markets, I can use the same tactics even when the market is going up. And in this video, I'll uncover what my ultimate portfolio would look like. Let's get into it. But first, before I show you the portfolio, I want you to hear something from this gentleman. He calls himself Uncle Henry, and I'm showing you this because my sentiment is the same as his. Check this out.
Volatility is your friend, so I embrace volatility. It never really concerns me, and I'm not really concerned about a bear market either, guys. I don't.
So I'm currently logged into the Robinhood app. Now I do other investing and trading on a different app as well, but this one is the easiest one to show and explain to a beginning investor, because that's the crowd I pretty much am trying to cater to. Now, although the market will be closed tomorrow due to the fact that they're honoring former President Jimmy Carter, so I'm unable to show you a live trade, but I'm just going to show you my portfolio. This is the two stocks that I presently own. Well, SPY is an ETF, so really one stock, which is Palantir. I have 100 shares of both, and Palantir closed at the end of today at 67.75. Now, I'm down a little bit, but I'm not worried. As far as Palantir and the ETF SPY, I'm up somewhat. So this is what I plan on doing with both of them. All right, first we're going to open up the ETF SPY. So being that I have 100 shares of SPY, I sold a contract against it. So I put my shares, I'm selling my shares to the open market. The strike is $5.95, and we'll see how much credit I got for it. This contract at the time of recording expires Friday, January 10th. I got a credit of 70 cents. But that's times 100, so it's $70. I just sold this contract yesterday, and so far it's down, or I should say up $7. You can see that right there. So I intend to buy the contract back before expiration. Well, actually, the market's closed tomorrow, so I plan on buying this contract back on the 10th. And I'm going to put in an offer for 5 cents or $5. Check off good till cancel, since the market will be closed tomorrow. Review my order. Okay, it's saying not enough options. That's because I already put an order in, but I just put it out there for y'all to see. As you see here, it says we're currently holding one contract for your pending order, so I had to redo this real quick. It says, you see here, this is the pending order, and I have it for 4 cents, or that's $4 actually. So we'll look at the stock Palantir. So Palantir also expires Friday, January 10th. And as you see, I got a credit for $44. Currently, this contract is worth only $5. So I stand to profit first thing Friday morning if it continues or stays stagnant. So in case I didn't show you or you didn't see this, the strike price on Palantir that I sold to the market is for $75. Now, I paid like $70 and change, closer to $71. So I'm going to offer $4 to buy it back. Good till cancel. Hit review. Now, you see where it says you're paying $4 to buy back one open contract, which will release my collateral and remove my obligation to sell 100 shares of Palantir for $75. That's $75 per share. Hit submit. Click done. And so there's a couple of ways this can play out. It can either expire worthless, drop down to zero, or my order gets filled at $4, or Palantir actually goes above $75 by Friday. Now the market's closed, which is Thursday, and you'll just pretty much see what happens. Now, yeah, I am down, but I'm not worried about it because I've done my due diligence, as you should if you decide to invest in the stock market or anything for that matter. This is a stock that I'm very familiar with, for I've had several hundred shares of this in the past. Now, this particular stock, FUBO, I did it a little different. So I'm still selling to the market, but in a different way. This is what's called a cash secure put. Now, what's gravy about this is they actually gave me a credit to buy the stock cheaper than what it is currently. Currently, those two contracts are worth $15 each. This contract or contracts expire the 10th of January as well. Current return is $32. So I hope this is not too confusing, but I offered to buy FUBO for $5. This is a $5 put, as you see here. I just felt the need to re-explain myself a little bit. This may be confusing for a beginner investor. Now, even though my put order is for $5 and it's currently at $5, I'm okay if I have to end up buying 200 shares. Hence, I have two contracts, as you see here. Now, as a cautionary tale, I did something that I normally would not do, and I asked you, the beginning investor, please do not do this, but I'll explain the reason why I did. Now, normally I would do technical analysis of a company before I invest in it and or trade the actual company. This one, I went purely on fundamentals only. And again, I am not a financial advisor. Please do your own research and due diligence before investing in the stock or anything else. So here's my fundamental reason for doing this. This company is doing business with Disney, and Hulu. And I'm somewhat familiar with this company. At one point, it was trading for like a little under $2. I think it was as low as $1.10, something like that. And there's a lot of volume with this company currently. Let me see if I can pull it up. Okay, so here we go. This is the average volume, 132.59 million. That's a lot of people trading this. Well, not only trading, some people I'm sure also invested in this. So you see right here, it went up as high as $6.10 today. And the high for the year is $6.45. Oh, and here we go. I was right. The 52-week low was $1.10. The low for the day was $4.32. So even though the low was $4.32 and I'm selling a $5 put on it, if I end up owning the shares, I'd probably be down a little bit, but I'm not too concerned with that. So here's the other component of selling a cash secure put. You see where it says cash collateral? I had to put that up in order for me to sell a put, well, the two puts to the market. Now, I know a lot of people are probably saying, man, that's a lot of put up money you have to do for such a little reward. But think of it this way. I'm doing it from the comforts of home. I don't have to go outside. But on the other side of that is, if this works out, I get to keep doing it time and time again. So if I keep doing this, I can average about 1% a week. Now, if you drop your money in the bank, now we're not going to get into amounts or anything like that, but just any amount, would you get 1% a week on your money? But this is not the only strategy I do within the stock market. This is just one of many. It's just that the other ways can be profitable, but it requires more studying than just fundamentals. You have to also know technical analysis, and it's a lot more riskier. So currently, I'm trying to form a community of like-minded people. If you like the video, please like, share, subscribe, comment, and all that good stuff. For those of you that watched the video to the end, I thank you for your time and patience with me. I hope that the video was enjoyable and that perhaps you even learned something. And do know, I am not a financial advisor. I am an investor and trader of the stock market, merely showing my experiences and some of what I've learned through the years of investing and trading in the stock market. And if you're a new investor watching this video, again, I can't urge enough to do your own due diligence before investing. And whatever you do, don't invest or trade with the rent money. Please don't do that. And one final thing, if you see a picture of me and there's a crypto offer that's attached to it, that is not me. I do not do that. Now, I do invest in crypto, but I will not offer anything about crypto to a beginning investor. And the only way I'll DM you is if you put something in the comment section and I'm merely answering your question, but I will not initiate any offer to you. Not by DM anyway. Matter of fact, there's something that you can do. If someone does come at you with an offer like that, where they're trying to sell you something privately, ask them to do a Zoom meeting with you and watch how they answer. Or ask them to do a live. Because if the offer was that great and they were truly about trying to prosper, they should put it out there for people to see. Point to ponder, right? Anyway, love y'all. Be well. Until the next video. Peace.